Hey everybody, it's Jeremy here, and we're wrapping up what has been one of the most bullish weeks of the last 5 months. Really, since June, we've not had a week where the market gained week over week as much as we have gained this week. So, were all of my October forecasts off? Are we still going to be able to hit some of these bearish targets, or has everything reversed? Find out in this market update for October 24th, 2022. Let's go. Hello everybody, it is Jeremy Whaley here from Trade Maestro. I hope you're all doing fantastic, having a great weekend or start to your week whenever you're watching this video. And it's great to be with you with another market update. My apologies that I have not had a new market update for a couple of weeks here. I have been a little bit under the weather and I honestly could not seem to get any done. I just didn't feel very well. So my apologies that it's taken a couple of weeks here. But I've got a lot of videos that I'm putting out this weekend and into this week. And we've also got a new program that I'll share with you actually right now. I was going to tell you at the end, but I'll go ahead and share it with you. This is our Bear Market Survivor. And you can come right on over to trademaestro.com and check it out. If you are looking at the market and you're saying, hey, what's going on? How do I survive this thing? For the next 3 days, well, it depends on when you watch this video, but Monday, Tuesday, and Wednesday, we'll be doing a live training on Bear Market Survivor. You're going to learn the truth about bear markets, what to do right now with your money, and how to thrive in a bear market. This is a free training, and you know, it doesn't really take anything from you to come check it out. And I think you're going to learn a lot, and you'll be able to really parlay that immediately into your trading accounts and your retirement accounts right now in the market with what's going on. So go over to trademaestro.com and check that out. And I'll put a link below the video so you can check it out there as well. All right, let's get into market updates here. There's been quite a bit of volatility over the last couple of weeks, which we're not surprised about. In fact, we had forecast that. I did a video a couple of weeks ago about market volatility and how much we could expect going into the fall here. We have seen that. We're seeing days where we have over 1,000 points of volatility intraday. So really, really big movements. But kind of the big story, and the one that's kind of been a surprise for a lot of us, myself included, have been days like this Friday, which was, well, it depends on when you watch this, but for me it was yesterday. Right there, we ended the day yesterday with 748 points to the upside, and then the big one was last Thursday where we had this big green candle and ended that day up 827 points. But the real story wasn't the 800 points to the upside. The real story was the fact that we'd started the day about 500 points to the downside, and somehow the bulls come back in the face of really, really bearish news, really bearish everything, and somehow push us up over 800 points. Same thing happened on Friday here. A lot of people are trying to say it's earnings reports, but it's really not. So what is the answer? What is the answer? The economy is not doing well. We have really horrible numbers. Interest rates continue to rise. In fact, there's a trade. I'll briefly pull this one up for us here. I don't want to get too far off, but there's a trade that I talked about a couple of weeks ago, TTT. This is an inverse exchange traded fund. We have hit the target on that we talked about a couple of weeks ago. We've hit the target right at $100 on that. But what this is, you see this continuing to go higher because interest rates continue to go higher, right? So if interest rates continue to go higher, why is the market doing well? It doesn't make any sense why investors would be taking new bullish positions. Why would we see this kind of bullish volatility? And I think I might have an answer for you. Now, full disclosure here. I've been trading since 1999. I know a lot about the market. I don't know everything, but I know a lot. And sometimes I find some new stuff that I didn't know. And about a week ago, I found some of that. I'm going to share that with you right now. I meant to do this a week ago, but like I say, I wasn't able to get some videos pumped out. But this is the plunge protection team, and this is something that was brought to my attention. I did not know this existed. I'm just going to hit some of the highlights for you here. The plunge protection team is a colloquial name given to a working group of financial markets created in 1988 Okay, so if you don't know the story about that, that was kind of on the heels of the 1987 crash. Created in 1988 to provide financial economic recommendations to the president during turbulent market times, yada, yada, yada. Here are the key things. Ready? Group is headed by the Secretary of Treasury. Okay, there's an insider. Members include the chairman of the Board of Governors of the Federal Reserve. Hello, that fantastic institution that we just love. The chairman of the Securities and Exchange Commission. No conflicts of interest there. The chairman of the Commodities Futures Trading Commission. They always do the right thing. Or aides of the officials designated to represent them. All right, so that kind of tells you who's involved in this plunge protection team. Now come down here to some key takeaways. It's a name given by the by the Wall Street Journal of this working group. But here's the official mission. This is what I want to draw your attention to. Official mission is to advise the president during economic and stock market turbulence. And you ready for this one? The critics fear that the plunge protection team doesn't just advise, but actively intervenes? No. Our government would not actively intervene to prop up stock prices, colluding with banks to rig the market. All right, folks. I have been a borderline conspiracy theorist for many, many years. People always make fun of me because I'm pretty prone to believing various conspiracies. I know firsthand that there is market manipulation. I know, as a matter of fact, that hedge funds and big institutions have manipulated more than once. That's not a surprise to anybody. I did not necessarily know that our government itself would be involved in manipulating the market. And when you come back to what started this conversation, come back to about a week ago. And I know I got lines everywhere because this is just an evolving market. I can't really prevent having lines everywhere. But I know about a week ago when the market gapped down on horrible, and I repeat, horrible economic news. Right there, we gapped down 500 plus points that day. And then somehow the bulls, against all odds, come roaring back 800 plus points. Something ain't right. I know something ain't right. And I do believe that that was an active prevention of some sort. An act of prevention. Did that come out right? I think that was, I think the plunge protection team was trying to intervene and manipulate the market. And I don't know that that is untrue for this right here that we see on Friday. But what I do want to do is I want to get rid of all these drawings for a minute so we can see some candles a little bit better. I have some yellow flags in terms of my forecast. And I'm going to be really transparent and candid with you. Whenever I get it wrong, and I tell you like it is. What I'm looking at right here looks very much like what we would call a stair step or a little flag continuation pattern. If you can't see that very well, it's that little thing I drew right in there. Okay, I just drew an arrow to it. That is a continuation pattern by all definitions. Okay, so let's take my forecasts aside. Let's take any bias I might have because I've forecasted a bear market. Let's just go based on the technicals here. And this breakout, when you look at this, let me change my pen color so that maybe it pops a little bit better. When you look at this pattern right here and you see the breakout right there, with a little continuation pattern right in there and the continuation breakout on Friday, that is a bullish pattern. That is a bullish pattern by every definition. Now, I don't want to call it a double bottom. A lot of people would call this a double bottom. It is a W for winner, okay, meaning that we should buy maybe, okay. But we get lots of W's for winner, so just because there's a W doesn't mean anything. It's not really a double bottom because it's not a large enough pattern to justify reversing and terminating this bear trend that we've had. So I'm not really going to call it a strong double bottom. If I were to see a double bottom, I would like to actually see this peak that we just made build into the first peak of the double bottom and then maybe continue from there. Okay, that would be a more appropriate size double bottom for the size of the trend that we've been dealing with. So could we call this a double bottom? Yes, it is a double bottom to the extent that it terminates this wave, which we will put from point A to point B. Okay, it terminates that wave and it is a double bottom on that fractal. And if you don't know that language, just ignore it and just trust me on that one if you can. Okay, it terminates that pattern, that trend, that wave for that fractal. But I do not believe it terminates the entire bear trend at this point. And so there's kind of a lot of moving parts here. We're dealing with anytime you're dealing with a bear market of any sort, it's a retracement of a larger trend. And so if I were to zoom way out here, let's do that briefly here. If I zoom way out, you're going to see that this is a big picture trend from 2009, which is part of why I have said we're going to have a big bear market, because this big trend right here really has not been corrected the way it needs to. Now, when you look at that and you see this trend line coming through here, you still come up with a target of around 26,000, which I think is a minimum target for this bear market. I still think we have that much room to go. But when you look at this most recent action, the last 9 months, and you see that corrective behavior, it is a corrective wave to the larger bullish trend, which is a grand super cycle or something that Ralph Nelson Elliott would have named it. Who knows what he would have called it. Doesn't really matter. It's a big trend, right? And so you got a big bullish trend. This is a corrective cycle of that. Every corrective wave, and I'm going to flip this over so I can look in your eyes. Every corrective wave always has chaos, okay? The only time you don't really have chaos is when you have very clean cut, what we call impulsive waves, and we don't have that here. So we are experiencing a lot of ups and downs, a lot of chaos, because it is a corrective wave of this bigger cycle. Now, I think it's going to correct substantially more than this, but at the very least, I still believe that we have more downside that we need to correct before this whole thing is completed. So I think I hit a couple rabbit trails there. I'm not sure which thought I may have left us off on, but the bottom line here is this is a terminal double bottom only for this wave that I'm drawing right here. The larger corrective wave, we'll call this from point T for top to where we are. Okay, that little cycle I do not believe is done. So let's talk about what's happening inside that. And I want to put my lines back on the chart here. We'll leave the moving averages off for now. But as I put these lines back on the chart, you're going to see these blue kind of diagonal lines that are mixing with these horizontal lines. And this is very clearly what we would refer to as a descending channel. Okay. Now, I did state this in our Sunday night profit picks a few nights ago, whenever it was, that it is entirely possible that on this bearish trend that we're in right now, that instead of just breaking bearish, we would continue this channel. And that does appear to be what's happening, which means it gives us a realistic target in the next week or two to potentially bounce as high as maybe 31,500 up to possibly 32,500 on the Dow. Our stochastics would agree with that. Our stochastics would suggest that is possible. That does not negate our big picture bearish trend. So what we have going on here in terms of market fractals, again, there's that word, but we have different time frames that are at play. And so you have a smaller time frame that is reversing and giving us a bullish move that is part of a larger time frame that is still a big bearish move. And so don't necessarily get too optimistic about this. Your fund managers, the so-called professionals, they're out there telling everybody this is the bottom. It's time to be buying, buy. They might be right, but they've been wrong all year, and I think they're wrong again. I do not think it's time to buy. I do think that we're getting a lot of additional whipsaws in some of our bearish trades, and we're seeing some bullish movement, obviously, but I think that the downside still has more to fall. I have forecasted since November that this would last all of 2022 into 2023, and probably not be completely done until somewhere between March and summer of next year. So I think we still have a few months of darkness ahead of us here. What's interesting is we are starting to see some bottoms coming in for some individual stocks. We don't see it on the indexes yet. So that's kind of my Dow Jones update. In terms of what I'm forecasting for the immediate week here, I really can't tell you exactly how this is going to play out because it's so volatile right now. It could go either way. I would not be surprised after this little continuation pattern that we got. I would not be surprised to see it push up to the blue line and then continue selling. That just makes perfect sense to me. It also makes perfect sense, since we are at the purple resistance line, it makes perfect sense to see a big bearish candle on Monday and see selling coming in from there. I think either of those are possible. Another possibility is that we would just hang out for a week or two right here on that purple line, maybe until the blue line connects with it, and then eventually the bears do continue. Those are all three equally valid possibilities, and I'm just going to go back to May and June here to highlight what that latter one would look like. Here's one where we sold off to the bottom of the channel. We rallied, we went back and forth for about a week and a half, and then the bears continued. And that is as valid of a possibility as anything. Anything really could go for the short term here. The long term, I'm still bearish. So no, I am not in the business right now of giving a bunch of bullish buy signals. We're not there. I'm sorry, we're just not there. It's way too risky. I'm also, being very cautious about some of these bear signals because we're clearly in a counter move to that bearish move that we took off in back in September and October. So I did think, and it's still possible, I really thought we'd be at least at 26,500 by the end of October. It's looking less like that's going to be a reality in the next week here. It's still possible, but no, the bear market's not done. I'm sorry. Bear market's not done. All right, now let's look at another side of this. Let's look at the S&P 500. And this is pretty telling to me as well, because the S&P 500, you see this here? The S&P has not put in any kind of a higher high. What? No, not in any way, shape, or form. The Dow broke up into the equivalent of like this purple lines here. The S&P has not. We are, even though we had some big candles on Friday, we're still very much in this bearish move. And if I put the moving averages back on, which we're going to do right now, you'll see we've retraced basically between the 20 and the 50 period moving average. So S&P does not agree with the Dow. And then when you look at the NASDAQ, same thing, folks. The NASDAQ looks as bearish as ever. So what does that lead me to believe? Well, I come back to what I said earlier about the plunge protection team. If ever there's potential evidence for the plunge protection team, I think this is it. It's a lot easier to go in and manipulate the 30 stocks in the Dow Jones than it is to manipulate 500 stocks in the S&P or 100 stocks in the NASDAQ 100. It's just a lot easier to go in and manipulate like that. And so I think, I can't prove it, but I think there's a really good chance that a lot of the big days that we're seeing in the market, especially in the Dow, are being driven by manipulation more so than true economic fluctuation that would justify the moves. Now, I know there's plenty of people that would argue with me on that, but that's my belief. So you're not here to get anything other than my perspective. That's my perspective. All right. Other things to discuss. I don't really want to go too far into crypto for this video, but Bitcoin continues to put its base in. We're just not getting any movement on it. Same thing with Ethereum, continues to put its base in here around 1,300. And then XRP, it started to break out. It does look like a bullish continuation pattern. I did a breakdown trade setup on this the other day, and it is just kind of been hanging out. If it's going to take off again, watch this stochastics to get crossing over here. Hasn't happened. XLM hasn't happened. I could just go down the list of all the cryptos that are just putting a base in and hadn't happened yet. So we will have a crypto revival. It will be sooner than later. It is not here for today, and I'm sorry. It's just not. All right. So that's it. That's pretty much your market update going into the week of October 24th. 2022. I want to remind you, if you are worried about your retirement, if you've been going down with the market here, maybe your financial advisors kept telling you to buy and you're like, no, I want to sell, but they talked you into it. Or maybe you've been sitting on the sidelines saying, I just don't know what to do. Let me help you with that. I've got my training here. It's a 3-day challenge called the Bear Market Survivor. And this is free. I mean, it doesn't take anything out of you other than approximately 90 minutes a day for 3 days. Bear Market Survivor, you're going to learn how to appreciate a bear market. Maybe you don't appreciate the bear market. If you're like most people, most people have been conditioned and taught the bear markets are bad, but they're not. Bear markets are not inherently bad. They're just different. So you're going to learn the truth about bear markets. You're going to learn what to do with your money right now. And then I'm going to give you some strategies so that you can start thriving in this market as we move through the next several months here. This is free. It costs you nothing. All you need to do is go over to trademaestro.com. Trademaestro.com. Here, I'll put this back up here on the screen for you. And get yourself registered. I'll also put the link below. Like I say, it is free. All you need to do is get signed up for it so I can send you the emails so that you actually have the links whenever it's time. And if you can't come to the live session, I'm going to do them during the day at noon Eastern time, Monday, Tuesday, Wednesday. If you miss the live sessions, there will be recordings available. But you want to watch them pretty quickly here because obviously the information is timely for right now, what's going on. So another reason you need to get registered so that I can actually send you a link to not just the live sessions, but also the videos once that it's all done there. So, all right, get yourself signed up for that. And listen, if you're not subscribed to this channel, then obviously you need to. So get yourself subscribed here to the YouTube channel. And that's all I got for you today. So happy trading to all of you. Hope you have a wonderful week. Hope you have a great weekend. And until next time, happy trading. Have a wonderful, wonderful week. Talk to you later.